Welcome to Make Your Money Matter with Brad Barrett, the show that aims to change the way you think about wealth management. Brad is a certified financial advisor, established radio host, and author of Retire Right. He is a managing director and partner at One Capital Management, an SEC-registered investment advisory firm managing over $4 billion for clients across the nation. Brad and his team are dedicated to helping clients protect and preserve their assets so they can reach their investment and retirement goals. And now, your host of Make Your Money Matter, Brad Barrett.
Welcome to Make Your Money Matter. I'm your host, Brad Barrett. I'm also a managing director and partner here at One Capital Management. And today on the show, we're going to be talking about bear markets, volatility, everything we've been seeing, frankly, in the past 15 months. This one's going to be short and sweet, but I would say this, that what's been happening over the past 12, 15, 16 months, I've talked a lot about it, but I want to really, as we end tax season, as we're focusing here in the next season of life into spring and summer, I want to focus on some things and relate market cycles and market volatility to the seasons of life and really ultimately speak to you directly, to your heart, and make sure that you are discussing these things within yourself, hopefully and ideally with an advisor, to make sure you are looking at your money and your investments the proper way. But before we get into it, make sure to go to our website at onecapital.com. There you can download and subscribe to our podcast. You can also go to any other platform, whether it's Apple iTunes, Google Podcasts, Spotify, or SoundCloud. Make sure to download and subscribe to the podcast. Leave us a comment and a review. It's always good to hear feedback. And with that, did you know the average bear market lasts about 1.3 years, while the average bull markets last around 6.6 years? 1 to 6, essentially. Your first bear market can be a real gut punch. And in a bear market like last year, after a pretty long bull run, really since 2008, 2009, seems like a lot of volatility, like, oh my gosh, the world's going to hell in a handbasket. That's kind of what our brains are telling us. But as you experience more market cycles, and this is coming from an advisor who's, been around the block for nearly 2 decades, obviously seeing a lot in those 2 decades. We've seen everything from Great Recession situations to government shutdowns to Brexit conversations. We've seen, currency conversations happening. We've seen a pandemic. We've seen a lot as an advisory group here. So I want to share some things as we experience more market cycles. And many of you out there who are experienced investors will hear this and know this. It gets easier to ride the waves and build wealth. So here's what I want to focus on, okay? If you study market cycles just in general, now I'm not a technical analyst by any means. As many of you know, I like to focus on more fundamentals. Essentially, I like to look under the hood and see if the engine is strong. I don't really care what the paint color is or there's a crack on the windshield in my relationship to a car as it relates to our investing world. What I care about is how the motor's running. And that's what we care about when we look at companies. We care about how they are doing internally. There might be noise on the outside of things going on, but the reality is, are they a good, fundamentally strong company? And studying market cycles, and you look at the whole, helps you see crashes or volatility as sales, not necessarily times of worry or scary times. And I think what I really want to share today on the show is making sure that our perception of how we see your investments and ultimately your retirement plan doesn't shift every other day with whatever's coming out in the news. Because friends, I will tell you this, in 18 years of doing this, what has dramatically changed in those years, the biggest thing that has changed, I think, within those years is the speed of information. Friends, I've shared this before, but we are not for lack of information in this world. Everything we possibly could want is at our fingertips if we want to. You can literally right now look up if something like coffee can make you blind, and then you could say, look up the same thing and see if coffee can actually help your eyesight. I dare you to do it right now. You likely will find an article that says, yeah, there should be some aspect that'll make you blind. There's gonna be some aspect that say that coffee can actually enhance your vision. So you're probably thinking like, and that's by the way, a lame example, but my point is this: you can find whatever you want to find if you are looking for it now. So if you want to find conspiracy theorist conversations or things that are gonna like feed the narrative of a worry or a fear, you can find it. You can also find on the other side the hope, and the other side of it, the optimistic side, and somewhere in between. Now, I'm not here to say that you need to be one or the other. What I'm trying to share is our job as portfolio managers, and what I want to share with each of you as investors in general, we need to look at our money objectively and unbiasedly. If we look at it with emotions, or we look at it with, because it's hard to filter our lens, if you will, of what we maybe read this morning, that's then kind of filtering into a conversation you're having in the afternoon about maybe doing something different with your investments. Believe it or not, it can actually shape that. You don't think it is, it's happening subconsciously. So objective and unbiased advice is probably one of the best advices I can give to anyone out there. I've shared this often, and I'll continue sharing this. My wife, Veronica, and I, our assets are managed by the same portfolio managers here at my firm, simply because I want objective advice. Even though I know what I'm doing with my money, at least I think I know what I'm doing with my money. I've been doing this for a long time. I understand economics. I understand portfolio theory. I know how to actively manage. I know the holdings that we're looking at. I get all that, but it's our money. And so I have a relationship to it, just like you do with yours. And so I like to offload that to someone who has an unbiased approach, our portfolio manager here at the firm, the same portfolio manager that works with my clients at our firm. So the point is, and I'm also a believer in what I preach of diversification, of asset allocation, strategies, rebalancing, active management. So all that comes into play. And it's important because as we look at things, and if you look at studying market cycles, the more you see them for what they are, they look more like sales than scary times or anything else. You know, the old market wisdom, as everyone knows, right, is what? Buy low, sell high. But most people, okay, and if you look at this by and large that I've come across over the years, most people buy high and sell low. Why? Because they invest with their emotions and follow the market sentiment with no real strategy.
Stay connected. Get frequent updates on the show. Follow Brad Barrett and Make Your Money Matter on most social media platforms. And catch full episodes of Make Your Money Matter streaming now on our YouTube channel. To schedule your no-obligation appointment, go to onecapital.com or call 805-410-5454.
Friends, we are coming off of winter, although dang, this winter's been long here in California, like we all know. But we're coming off winter. We are in spring, technically right now. Think of market cycles like seasons. And think of what we're going to be coming into our next season here of summer. Summer's like a bull market. It brings growth and optimism. You know, while winter, for example, you know, not for many across the country too, bear markets, it's a time of maybe sluggishness and maybe decline. However you want to look at it, but just as seasons change, so do markets. That's what I want to share here, friends. One thing to keep in mind is that the quote unquote winter paves the way, if you think about it, for a new summer. So if you think about it in seasons, right, you have to make sure that we don't get lost in a season of our life, or my analogy here of just seasons in the world, right? We don't get lost in one season and not prepared for the next. I mean, take this, for example. The stock market, if you look at it, has been around for a long time. The stock market survived the Great Depression. It survived things like World War I and World War II. It survived the 2008 financial crisis and obviously several other events that made it feel like, to many of us, that the economy was close to collapsing. I think any one of us, no matter what age you're listening right now, you can very easily dissimulate some time in your life where you thought that this is it. You know, this is the big one. This is bad. We're not going to recover from this one. Yet it has. And I'm not sitting here to say that that's always going to be the case, but you look at history and you got to be prepared for that next season, right? The market recovered stronger if you look at it each time. And this is just historical data, right? The market is a lot more resilient, I think, than most people give it credit for. So you really should not touch your portfolio unless you're going back to buy more during volatile times. That is, friends, a blanket statement. That is obviously something you should speak to with your advisor about. But bear markets sometimes, and many times, if you look at history, equals long-term opportunities. So again, back to my season analogy here, make sure that you don't get lost in one season, not prepared for the next. And if you look at a winter season where it's a bear market, you're thinking, oh, we're never gonna get out of this, or it's just bad, 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 bad. And if you look at it from a different light, and I shared this a lot on our podcast a couple weeks ago, in fact, over the past few months, I've discussed this, that a lot of what you don't do during bear markets or volatile markets is more important than what you do. The whole idea of not touching your money during volatile times might be the best approach for many out there. Again, this is something you want to talk to your advisor about or go through for yourself within your investments or your specific situation. But it's really important because the overreaction can sometimes lead to poor decisions. Again, something to go through when you look at market theory and just understanding the cycles that it goes through. I'll end on this. If you realize that the stock market doesn't always go straight up, and you know that, and you can pragmatically sit with yourself, look yourself in the mirror and say, yeah, I know that, then you got to think, then why would I react during some of the blips in the market? If I know it generally goes up, but it doesn't go up in a linear line, I'm going to have market cycles. I'm going to have volatility. Sometimes breaking it down to like first base level, it makes a lot of sense before we get all wrapped up in some of the noise of this world, which, by the way, again, there is a ton of noise. And I will say this, the one certain thing I know about is that there will be uncertainties. And so the reality is managing a portfolio around the uncertainties, you can't eliminate them, friends. So we have to encompass them in solid diversification, in solid market strategies, in asset allocation, things like rebalancing, all the active management that a portfolio manager should be doing for you. That's where it matters. I want to thank you for listening to the Make Your Money Matter show. As always, before acting on anything discussed today, speak with a financial advisor near you about your specific situation. Or again, if you'd like our help, you can reach us at 805-410-5454. And until next week, always remember, make your money matter.
The information in this show is educational and general in nature and does not take into consideration a listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.